for me, valuation is super important. And, I think that I still have plenty of room to play while still being valuation conscious. And sometimes I really like to find those uncut gems as well, where it's like the market for some whatever reason doesn't necessarily see the potential of this founder, this company, but I see a lot of stuff here, and I think they're going to be really successful. And Sequoia is not trying to squeeze in, and that's great.
Hey everyone, this is Prashant and I'll be your host for the VC 10X podcast. And today we have Kevin Jiang with us. Kevin is the co founder and managing partner at Mangusta Capital, a venture capital firm investing in consumer and vertical AI businesses shaping the future. Prior to starting Mangusta Capital, Kevin was part of the founding investment team at Softbank Vision Fund, leading the coverage of software and logistics growth equity investments in North America. In this episode, we talk about Kevin's story and why he started Mangusta Capital, why he chose to focus on vertical AI startups, how he got connected with the Vecchio family, which then made the $50 million LP commitment in Mangusta Capital Fund 1. How will AI change the world we live in? Is AI a threat to knowledge workers? What qualities make founders win big? And lots more. So, without wasting any time, let's dive straight in. This episode is sponsored by my own podcasting agency called Podcast 10X, where I help VCs start and run their own podcast. While I was running VC 10X, this podcast that you're listening to right now, I asked my VC guests, why don't you start your own podcast? I mean, it's the best form of marketing for VCs. As they say, VC is a people play more than even a capital play. A podcast enables you to put your people at the front, your portfolio founders, your partners, and co investors. It's a great way to build a brand and win competitive deals. It activates all your marketing channels in a single shot, be it YouTube or blog post or newsletter or social media. Everything gets activated in a single shot. And I get the same response from all the VCs that it's a lot of work and we don't have the time for it. I said, all right, let me handle the work for you, from pre recording, editing, publishing to making social media clips. All you have to do is show up on a call, hit record, do the recording using the well researched outline we provide you with, and you're done. We handle everything else. You know what they said? All right, let's give it a shot. So, if you are a VC and want to up your marketing and branding game, I'd love to work with you. And if you're thinking there are too many VC podcasts already, remember there are way more VC firms out there. And if you're not standing out, you're losing out. So, if you want to work with me on starting your podcast, go to podcast10x.com and book a call today. I'll add the link in the description and show notes below. Look forward to working with you. Hey, Kevin, so good to have you on the VC 10X podcast. How are you doing?
Doing great. Thanks for having me, Prashant.
Yeah, it's a pleasure having you on. To start things off, can we first have your story and why you started Mangusta Capital?
Yeah, absolutely. I grew up in the Bay Area. I'm from Silicon Valley. Parents were first generation immigrants and worked in a lot of the semiconductor companies here in the 80s and 90s. And so I just grew up fascinated by everything that was happening around here. Ended up studying at Harvard, majored in economics, and jumped right into finance and technology right after that. So started out at Goldman in their investment banking division in New York, worked at Apollo in their private equity group as well after that. And I joined SoftBank for the last 10 years, helping build out that platform. So as you may be aware, SoftBank's the late stage growth equity arm for the large Japanese conglomerate led by Masayoshi Son. We primarily do everything tech investment related, raised one of the largest venture capital funds ever in the world, and we're able to make a lot of great investments out of that fund, everything from NVIDIA to ARM. And I think Maso is really one of the first AI investors. He talked about it over 10, 15 years ago in many of his public earnings presentations. So he was almost prescient in a way. Over that period of time, made amazing connections, got to meet thousands of founders, and ultimately decided to spin out and start my own fund about 6 months ago. And so that's Mangusta Capital. Mangusta means mongoose in Italian, and we are backed by a prominent Italian family office as our anchor LP. and we are investing in vertical AI. So I talk about that as essentially industry specific AI solutions, sector focused tools and technology that really helps use AI to be able to make different companies and industries much more effective and productive and efficient. So for me, I wanted to start Mangusta Capital because I saw this huge thesis, which is the one that we're investing in, that is very early stage, very early innings today, where there's a ton of founders that are building pre-seed, seed stage businesses, but growing extremely rapidly. And I just felt like this is an opportunity I have to invest behind. I've always wanted to run my own fund and really drive the investment decision making, and really build those personal relationship with founders. And so that's kind of why I jumped the ship and decided to spin out and start this fund.
Absolutely, that's quite interesting. And given your elaborate experience within the investing world, why did you choose to target vertical AI startups? And how's that placed in kind of the evolution of AI startups? And why do you think that the vertical AI startups would be the next big thing?
Yeah, absolutely. So it's a good question, right? The way that I think about the world broadly is that, I think there's the AI ecosystem and the AI evolution will look similar to the internet and computing revolution of kind of the 90s and 2000s, where you have a ton of infrastructure companies, whether it's hardware like NVIDIA and other chip makers, GPU, CPU makers, and you also have a lot of infrastructure on the software side, whether it's the large language models or other diffusion models and other kind of foundational models, right? And ultimately, over time in the 90s and 2000s, we saw a lot of the hardware and infrastructure providers ultimately become commoditized over time. It's hardware is usually quite capital intensive. You have Moore's law, which decrease costs over time, and in a lot of cases, it was kind of like a race to the bottom. And so our belief is that obviously there's a ton of attention today on the hardware side and infrastructure side of the industry with Nvidia at all-time highs. But I think over time we believe that competition continues to chip away at some of those initial advantages. Supply and demand imbalances will eventually normalize, and pricing will come down for a lot of those solutions. And so our belief and our focus is applications as a result, because we think that those are more capital light, not as asset heavy, capital intensive as creating hardware and training models. We think that you can still have a very defensible business with proprietary data moats, integrations, branding, and product marketing that is very difficult to replicate as well, where you can actually scale and grow revenues much faster than you would with a hardware infrastructure business. And so that's primarily the reason why we look to the past to how the future will evolve. And we think that's one of the reasons why we want to really invest behind the application layer. I think the second thing, anecdotally, as a story, when I was at Softbank, we looked at a couple of legal AI businesses in the focusing on corporate lawyers and other legal professionals that were able to use a co-pilot tool, for example, helping them with searching through documentation to be able to make them more productive. And so there are two companies that we looked at relatively early stage. One of them ended up get acquiring in 5 months by a large public company for what would have been a 10x return for us. And the other one was a company that's now a Sequoia-backed unicorn that would have also been probably a 10 to 20x returner for or at least on paper markup for us. And so those examples anecdotally were ones where I saw this thesis play out, which is why I wanted to do really focus on this specific thesis.
Yeah, that's quite interesting, and I love how you derived at the thesis for Mangusta Capital. And also, tell us about how you got connected with the Del Vecchio family, and what is the story behind the 50 million anchor commitment they have made to the Mangusta Capital Fund One.
Yeah, absolutely. So, I was spending a lot of time, speaking on the conference circuit and meeting a lot of other LP GPs when I was at SoftBank. And It's an amazing ecosystem, right? A huge ecosystem of co-investors, friends that I still, very much keep in touch with, and entrepreneurs that we back as well as that become investors later down the line too. So when I was at SoftBank, I actually was at a conference in Lisbon, one of the largest European conferences called Web Summit, and ended up getting introduced to a friend of the family who's an advisor and now one of my co-founders today, Tommaso Chiabra. And essentially, we connected on our shared passions about investing in AI, investing in technology, and this new thesis that was emerging within the vertical AI space. And so the more we talk, the more we realize there's a lot of synergies that we both bring to the table. Myself, as someone who's a native of Silicon Valley, has been building out my network and investing in this asset class for over a decade. And then himself and Leonardo as folks that are obviously extremely well connected serial entrepreneurs within the European ecosystem that have a great network of potential investors as well as strategic insights into what's happening in consumer, retail, a lot of other industries, and AI applications for those industries. And so we connected at a happy hour cocktail event, ended up working on a couple of deals together, really had built a great relationship. And at some point, we spent a couple days in Milan meeting with the Del Vecchio family as well as the anchor LP, the principal of the family, and essentially built a great relationship over that course of a few months to about a year that the anchor investment was made. And they were very excited about this AI thesis that we're pursuing as well. And so I just think it was a great synergy between all parties where, I bring a lot of the Silicon Valley kind of ecosystem. They bring a lot of the European and consumer corporate kind of ecosystem to the table.
Right, absolutely. Thanks for sharing that. And given your amazing experience investing into the field of AI from its very early days when it was not that famous as it is today, how do you think will AI change the world we live in? Do you think it's going to completely reinvent what already exists, or do you think that it is going to help evolve what already exists?
Yeah, no, it's a good question, right? I think for me, I believe that the AI transition will be a gradual one, right? We have a lot of AI co-pilots and tools today that people will use, whether it's ChatGPT or Claude or Llama, Grok. So, those are generalized large language models, but I think there are also very specific AI co-pilots, for example, the ones that I mentioned in like the legal space, or one of our portfolio companies is called Tax GPT, which is focused on the tax space. So providing a really powerful tool for tax accountants and professionals there to be able to make themselves do the work that maybe it took 2 hours, they can do in 1 hour. And so, or maybe 5 minutes. And so that's really where I think we are today in terms of how AI is able to really transform and make people more productive. And I do think that transition is going to be gradual, right? It's not like tomorrow there's going to be an AI that's powerful enough to completely replace a tax accountant. There's a lot of human judgment. There's a lot of changing regulations. There's a lot of analytical ability that the AI, may not be fully trained on being able to do today. But I think over time we may get to that point. Right, technology evolves at an extremely fast pace. These models are getting smarter and smarter. You have more and more data that you're feeding in to fine tune them for specific use cases. And so I think over time we will see, a lot of very, very powerful applications being brought to the table. But I think over the next, call it 3 to 5 years, I believe we'll be in a more transitionary period where humans actually need to learn how to use AI very effectively. And especially, I think the new generation, the younger generation that's going through school and writing essays in high school, college, because AI is not going away. I don't think it's going back, into the closet or anything. And so people really need to figure out how do you adapt and become, stay competitive in this world where now AI tools are ubiquitous, and you have to be able to, still be really productive and be differentiated.
Yeah, absolutely. And you mentioned about how in schools they ask you to write essays. Maybe now it's time to introduce prompt writing instead of essay writing, because if you write the right kind of prompt, AI can write that essay for you, right?
Hmm. Yeah, absolutely. I think it's funny because yesterday, like, ChatGPT was down for I think an hour or something, and I was just thinking, like, what about all those kids or students who are using ChatGPT to write their essays? What are they going to
Yeah,
use? I mean, thankfully, there's more than one large language
right,
model that you
right.
can use
Yeah,
out there, so they
totally.
can always switch to something else. But
Yeah,
it was just a very funny experience.
yeah. It's a good thing we have plenty of people taking a shot at that. So students are taken care of. Awesome. Uh, and kind of on the same tangent, do you think AI will become a threat to knowledge workers?
Yeah, no, it's a good question, right? I think obviously the way that we want to invest is thinking about these knowledge worker industries where there's a high amount of labor and there's expensive labor, right? Because those are the areas where you can monetize relatively quickly if you provide a solution that makes workers more productive, that can help automate some of these rote tasks or manual tasks. So it is something that we think about certainly today as we invest in application specific, industry specific applications for those companies. So I do think it is I wouldn't say a threat, but it's a supplement today, right? It certainly supports those knowledge workers today. And as I said, it's much more of a gradual transition. Do I think in a world in the future, whatever it is, 10 years in the future, where you could completely replace a knowledge worker potentially? I do think there's always elements of creativity as well as relationships that are very hard to truly automate away for humans, right? So part of being a knowledge worker, say in the legal space, is also developing client relationships with your clients, building that human connection, finding new clients and making them feel like they're trusted, they're heard. And so there's definitely an emotional and relationship human component to all these jobs and these industries as well, which I don't think you're going to be able to fully automate away with AI. But I do think a lot of the maybe rote tasks could be. And so for me, it's really thinking about it as a supplement today and a supporting mechanism for a lot of the knowledge workers today. And then over time, I think humans will continue to focus on those truly human elements of the job, right? And being able to excel at those as opposed to the more rote manual types of the job, parts of the job that AI could necessarily take over.
Absolutely. Yeah, it's important to note like business is a lot more about relationships and trust than the job to be done. The job to be done can be taken care of by the AI, but the relationship and the trust aspect still needs to be taken care of by humans, at least for now. Right, because we also see some applications of AI in the emotional world as well. I've seen applications, dating applications, for say, right. So you can just talk to someone. There's like an AI girlfriend or an AI boyfriend that you can talk to, and they can have that conversation with them, right? And it can be a way for you to get better at your dating game, and get better at holding that conversation that can help you in a real conversation with a real girlfriend, right? So those kind of things are also there. So the AI can also help you get better at those things, building trust, building relationships, and things like that. So that's also there.
Absolutely, absolutely.
Yeah. Awesome. Let me ask you about the transition. So you were earlier at SoftBank, also doing growth stage investing, also looking into AI, and now you have started your own fund, vertical AI focused. How do you see this transition? What has changed for you from what you were doing at SoftBank to what you are doing now? What are the different parts of the job that were not part of your job earlier at SoftBank but are now part of your job? How different is it?
Yeah, no, it's a great question. It's a huge shift, I think, across many different elements, right? I think the couple that come to mind or that are top of mind are one is, from a building out the firm perspective, I have to really be driving a lot, everything from the operational to the back end to the back office to branding and marketing, to fundraising. So it's really all encompassing, right? You get to see how the sausage is truly made from the beginning to the end. Whereas when I was at SoftBank, obviously it's much more focused on investing. So I was just part of the investing team, We had a investor relations team, we had a fundraising team, we had a back office team for finance, for accounting, for marketing, for everything. And so it just, it's a well-oiled machine with a large team behind it. But today, at Mangusta Capital, I've got to be all of those different teams, right? And so I think that's the biggest thing that, to be honest, I've really enjoyed. It's obviously a lot of work, but you really get your hands dirty in a lot of different kind of ways, and you get to see all the nitty gritty of how things are put together, right? How the fund administrator works, how their accounting works. How do you really think about building a brand and building events and doing podcasts like this, which honestly has been a lot of fun. Certainly a lot more work, I think, but it's a lot more fun. And so I think that's probably, just the biggest change is having to handle and take on a more all-encompassing role. I think the things that I really love about it is that, I have a lot more autonomy and creativity that I can bring to the platform in terms of where do I want to spend the time? How do I want to think about the brand and the story of the firm and what we represent, and how do we tell our story to the world? And so I think that's really the exciting thing about being a founder, honestly, and being an entrepreneur is that you're able to actually kind of mold your story from clay and start from a blank canvas to be able to create whatever you want to create. And so it's been fun. It's been really exciting. I think the other obvious thing is that we invest at a much earlier stage than SoftBank. So where SoftBank is predominantly a growth stage, late stage investor, has done a lot of pre-IPO types of investments as well. We at Mangusta Capital are much more focused on Series A and before pre-Series A types of opportunities. So everything, or as early as pre-seed. And so it's a much different experience as well as it's a much different kind of focus in terms of how we evaluate startups, right? I think the earlier stage you move, the more management team founder matters because there's just a lot less business, there's a lot less accounting and P&L and financials that you can look at to evaluate an opportunity. It's a lot more about how you think that the founder is going to be able to execute on their vision and the product and the business that they're building. And so for me, that's been very much a welcome change as well, because to be frank, I think that's one of the secret sauces and skill sets that I bring to the table, which a lot of other kind of investors don't necessarily have as good of a pattern recognition, having seen, I've met thousands and thousands of founders at SoftBank, and so I know what it takes to make it to the unicorn stage and beyond. I think a lot of earlier stage investors, whether they come from an operating background or more just from a pure play kind of early stage background, they may have only seen a couple of unicorn founders throughout their career, and so it's a very different kind of network as well as kind of pattern recognition pool of founders that I've seen walk through the gates of SoftBank and be able to really actually make it to that stage, right? So it's a super interesting change that I appreciate, and I really love seeing how that plays out over time. So those are some of the big things that come to mind.
Absolutely, I appreciate that, and you certainly bring that unique perspective on that front. Evaluating founders and teams is that you have seen successful founders because you were a late stage investor. That means the founders you were interacting with were a lot more mature. So, if you had to look at that data set and to derive at what are the key elements that should be there in a founder, that when you're evaluating a deal at the early stage, that you can see that are these things there in this founder or not while making that investment, what are those key things that can tell you that okay, this founder is going to survive the grind that follows from here on.
Yeah, no, absolutely. It's a great question. I think every VC looks for different things, and so I can certainly talk about kind of what I look for. For me, it's the first thing that it starts with is a tenacity and hunger to really succeed, and the drive and the focus to really force that to succeed, right? I think Mangusta represents that spirit in a lot of different ways. Mangusta means mongoose in Italian. And the reason why we chose that is because the mongoose is kind of like our spirit animal. For those listeners who are not familiar, the mongoose is this small animal that is feisty. It fights cobras. It punches above its weight, and it's actually a very symbolic and mythical animal in a lot of different cultures. And there's some fables that are written about the animal. And I think of ourselves in a very similar way personally as a VC firm, and personally myself coming from a kind of immigrant background where you're pushed to really succeed because you come to the country with nothing and you've got to be able to make it, right? And you got to put food on the table. And I think that immigrant mentality or that just hunger mentality is something that's super valuable to have as you're a founder building your business as well. And so that is really our spirit animal in terms of the way that I operate as a GP, as well as the founders that we back, is that they're really super hungry and ambitious and driven to succeed at all costs. And so I think that's the first thing that I look for in a founder. It's often hard to assess that because a lot of people are great salespeople. They're really good at presenting themselves and telling a story. But I think the best way to really get to know who someone is actually to track them for a number of years and actually get to know them really well as a person. So in a lot of cases, the founders that I've backed are people that I've known for 2, 3, 4 years, people that I've known from my Softbank days. I stayed in touch. They exited their previous business. They're starting a new business. Maybe, we weren't able to, they were too early at SoftBank, but now they're the right stage for me. So I think those are the people that you can really get behind because you have a lot of data and you've already known them for a period of time. So you know how hungry they are, how much they can actually push the envelope, how they can actually execute. And so that's something that is super valuable, having that time series data for a founder and building a relationship for a longer period of time. So I think that's the first thing that I look for is just that chip on the shoulder, really, really hungry, ambitious, driven mentality. And they, spend all days of the morning and night, 24/7, thinking about their business, working on their business. I think the second thing that's I like to look for is usually a repeat founder. It doesn't have to be, first of all, it doesn't have to be a repeat founder. We back certainly plenty of first time founders as well. But I do think repeat founders have an advantage because they know what it's like to go through that process of starting a company and the hardships that come with that, right? So it's what it takes and you've signed up for the journey again. Whether your first startup was successful or not, doesn't really matter to me, honestly. Obviously, great if it's successful, but even if it's not, you learned a lot through that process and you probably know which pitfalls to avoid the second time around. And you know what things you can do to accelerate your process the second time around. So in a lot of ways, I think you start with a bit of an advantage as a second or third, repeat founder, and hopefully you do better the second time or third time around, right? There's a lot of cases where the first company that a founder started wasn't their biggest success. It was really the second, third, fourth company that they founded that became that $1 billion, 10, $100 billion kind of opportunity. And so for me, I do think repeat founders typically do have a little bit of a leg up. And so I like to see that they've kind of been through the trenches a little bit before. And so that's the second thing I sometimes look for. And I think the third thing that I really like to look for is someone who's willing to build a team around them that's better than themselves in a lot of ways. I think there's certainly a lot of founders out there that have an ego, and oftentimes when I see folks that are building a team surround themselves with not necessarily A players, but B players, I think it's oftentimes because their ego can't allow them to take on those true A players that shine even brighter than themselves in a lot of ways. And so when I look for a founder that's building out their team, I like to see, hey, this person has no ego. They're willing to hire people that will outshine them in a lot of different arenas, a lot of different aspects, and they're willing to bring on people that complement their skill set in a lot of different ways, right? You don't want just kind of a repeat mirror image of the founder in every single role. You want someone who brings to the table marketing experience that they don't have. You want someone who brings finance experience that they don't have. And finding someone who's really able to build that complementary team of skill sets is something that I also really value when it comes to looking at founders and management teams.
Absolutely. And talking about pitfalls, what are some common mistakes for which you have seen even great founders fail?
Yeah, no, it's a good question. I think there's so many. There's so many, and so maybe I'll cover a few of them. I think one of them is certainly focusing a lot on the raising, whether it's trying to raise at a high valuation as much as possible, trying to raise too much money that you don't really need, and setting yourself up to, for a down round, or having to try to raise more capital at an up round, or increasing your burn far more than it should. So I think one of the most common mistakes is actually just focusing too much on capital in general. I think at the fundamental basis, you should be able to build a business with relatively little capital, unless you're building something like deep tech, frontier tech, super capital intensive. You need a lot of lab equipment, or raw materials that are expensive. I get that. That's a different, in my opinion, that's a different field than what I typically do. But when you're looking at vertical AI or software types of businesses, you used to have a lot of founders that would just bootstrap the whole thing, right? They wouldn't raise any capital, and you could build an amazing business, and you have to learn how to be capital efficient and almost profitable day one. And so I think in those cases, we forget that there was a time when you could actually, and you still can do that. And so for me, one of the things that I often see a lot of founders kind of mess up on is really thinking too much about capital, or spending too much time on capital, and approaching it not necessarily in the right way. Um, I think outside of capital, I think the other thing is really at the early stages, being able to figure out and pivot towards something that really works. I think a lot of folks start with a very, very big, grand vision of like what they want to build, and how they can be $1 trillion business one day. And you obviously have to dream big to be able to come up with the right narrative, as well as product and business, to believe that you could be a $1 trillion business one day. But honestly, when you're starting out at a very early stage and building the company from the ground up, I think the first thing you should do is try to find a product, just find product market fit, right? Try to build something that 10 or 100 people love. They love what it is, they love what it's able to do. They'll really advocate for you, they'll pay for the product. And then once you really have that product market fit, it doesn't have to be the largest market to start out. It could be tax accountants, or I mean, I think that's still a large market, but it could be, a more specific vertical or niche that you're targeting, and actually just start to sell and start to make money, generate revenues, show that the product and market is really fit, is really there, and you're able to make this a good business. And then expand, right? Then expand into other industries, expand into other use cases, expand with other customers, go up market or go down market, find other ways to really expand your TAM after that. But I think a lot of founders kind of start too big, and they forget, I've actually got to build a product and make some revenues in the beginning, not just, keep dreaming.
Yeah, absolutely. Thanks for sharing that. That's very insightful answer. And how do you see the venture asset class performing in the next 1 to 5 years?
Yeah, so that's a really interesting question, right? I think we've gone through a very volatile cycle over the last 5 years, from 2018, 2019 through COVID, where we reached the peaks in 2020 and 2021, back down to reality in 22 and 23. And I think we're kind of in this bit of a lull period in 2024, going into 2025, where I think there's a lot of data out there that shows that actually the venture capital asset class has raised the least amount of investor LP dollars in the last, I think, 5 years, which makes sense given we've gone through a bit of this cycle from the top to the bottom. And so I think we're going through a little bit of a reset now, personally, where venture capital as an asset class should go back to where I think it should operate, which is relatively smaller fund sizes, relatively more capital efficient businesses, relatively more focused on achieving a sustainable business model over a shorter period of time. I think we went through a lot of grow at any cost in the 2020 and 2021 period. And I do think we're kind of reverting back into a perhaps a more normalized philosophy and a more normalized period over the next few years. And so I'm hopeful that, maybe next year, 2025, will be a little bit of an uptick from the fundraising dearth in 2024. But, we'll see where things go. I think, there's a lot of resetting that has to happen. There's a lot of mindsets and folks that, and companies as well, that kind of still need to transition into the new era. And it doesn't certainly help that in a lot of cases there's AI startups that are still raising lots of money at really high valuations. And I think a lot of large venture capital platforms that continue to feed into that phenomenon. So I think there's a lot of competing forces, to be honest, at play here. And so it's a little bit hard to see exactly where things are going to go. But at least my opinion is that venture capital started out as a cottage industry where you didn't really actually have that much capital to deploy, and now it's become a full-blown huge industry that I think may want to return a little bit more towards its origins.
Absolutely. And kind of on the same point, we see a lot of AI startups commanding a premium valuation even in the current times. And you investing in the same space, how do you look at valuations? And are you willing to give in to those premium valuations? Or are you more sensible about it and are willing to pass on some good investments just because you feel they are overvalued?
Yeah, valuation is important. For me, I come from a bit of more of a traditional finance background actually. So I, spent a couple years in investment banking, working on M&As and IPOs for public companies. I worked in private equity at Apollo, which is, one of the later stage mature private equity giants out there. And we were always quite value oriented actually as a firm. And so for me, EBITDA and cash flow are things that I really understand and I like to see. Obviously, that's very different in venture capital. You don't often see a lot of companies that are profitable, at least for probably the first 5 to 10 years of their life. But for me, that is something that really matters is the fundamentals of a business. And valuation, I think of as one of those key fundamentals as well. Because if you're investing in a business at a really high valuation, you're almost pricing yourself out of a return in the future, right? If you enter at a valuation that the company is just not going to grow into or is going to take a long time to grow into, your dollars are actually not really appreciating for quite a period of time. And so for me, valuation is extremely important. I get it with some of the larger platform funds. They're able and willing to invest in, for example, repeat founders that have had multi-billion-dollar public exits and give them blank check, pre-revenue, pre-product, give them $100 million at a stupid valuation and just let them run at it. That's fine because for those large platform funds, they have billions of dollars to deploy and they need those $100 billion outcomes in order to return their fund or drive performance to their fund, right? And so for them, I understand the strategy of, hey, let's just write these large checks into founders that we think could build the next like Salesforce or Stripe. And I get it. For me, that's not what I need, and that's not what I focus on. Our fund is going to be probably 75 to $50 million. Our goal is to be investing in relatively capital efficient businesses. If we have one or two unicorns, honestly, we'll return the fund. And so I actually don't need those $100 billion outcomes. And that's the blessing of actually being able to run a smaller fund is you can actually oftentimes outperform larger funds with just a few big winners in the portfolio. And so for me, as I think about, how do I want to play within this field, I do stray away from those really crazy rounds where people are getting ungodly valuations and amounts of money. I'm really focused on, hey, who are those folks that I could still see building a unicorn business, but I know they're going to be a little bit more thoughtful about it. They're not going to grow at all costs, and I still believe very much that their background is really impressive, but maybe they're just underappreciated because they haven't had that huge exit in the past that Sequoia and Andreessen's really excited about. So I think that's for me, valuation is super important. And, I think that I still have plenty of room to play while still being valuation conscious. And sometimes I really like to find those uncut gems as well, where it's like the market for some whatever reason doesn't necessarily see the potential of this founder, this company, but I see a lot of stuff here, and I think they're going to be really successful. And Sequoia is not trying to squeeze in, and that's great.
Yeah, absolutely. Yeah, great perspective on that. And what are the biggest challenges that you're facing at building an AI focused fund, Mangusta Capital, today?
Yeah, I think part of it is kind of the overall macro environment, right? I think we just went through a huge, peaking in 2020, 2021 of VC becoming, from a cottage industry into a everyone knows about it industry. When your taxi driver's talking about the latest hot startup and SPACs, that's when things are probably coming to an end. Um, and so we've gone through a bit of this cycle where a lot of people have been burned by venture capital. A lot of the LPs that I talk to, whether it's institutional or family offices, they went very hard into the paint in 2020 and 2021. They've seen tons of markdowns in their portfolio, whether it's direct investments or fund investments. And so there's a lot of hesitancy to go back into the asset class and deploy more dollars. And also they just simply don't have the liquidity sometimes because venture capital is a pretty long dated asset class. And when you go through a cycle like this that we just went through, you're not going to have a lot of distributions if there's not a lot of IPOs, right? And so that's one thing that has certainly been a challenge for the overall venture capital market broadly today. I think as we kind of hit the reset button over the next, I think, 1 to 2 years, I hope that will change. I hope the IPO windows do open up next year, and we see Service Titan going public this week. We'll see hopefully a couple other names go public in the new year as well. Those distributions hopefully should return capital to LPs where they can redistribute into the asset class if they so choose to. But I think that's probably one of the larger macro challenges that I see today. And frankly, I can't choose the timing of where we are in the market cycle. I can only choose where I play within that. I think our strategy is very sound. We're performing really well already as a fund, almost marked up 2x. And so in the short kind of 5 or 6 months that we've been active, it's been a really good performing kind of time for us. And so for me, it's a little bit less thinking about the macro. It's more about the long term, right? My goal is to raise multiple vintages of funds, hopefully focused on the same strategy. And for me, I want to make sure that the performance speaks for itself. And so at the end of the day, I think that's really what people care about and LP should care about, which is at the end of the day, there's a lot of noise, but if someone's really got a sustainable, clear, thoughtful strategy that executes and performs, people recognize quality at the end of the day.
Absolutely, completely agree, and a great mindset there. And how are you making Mangusta Capital stand apart from other emerging funds that are out there?
Yeah, no, it's a good question. So I think there's three kind of key pillars of differentiation for us. The first is really my experience at SoftBank, an AI native investing experience. There's very few, if any, emerging funds out there that have the kind of experience that I've had where, I was part of, one of the largest investing platforms for over 10 years. And as I mentioned, Masa was one of the first AI investors ever. I think he talked about it over 10, 15 years ago. You can look at it in his public earnings transcripts. And people often forget that he was almost too early to the party, I think, in a lot of different ways. But I think a lot of the things that we were investing in were AI businesses, even out of Vision Fund One. For example, Uber, DoorDash, Coupang. We did invest in Nvidia. We invested in ARM, which is now one of the largest, hardware manufacturers for AI chips as well. And so, in a lot of ways, we were investing behind AI 1.0 where there was big data and machine learning. And I think that perspective of having invested already for the last 10 years in AI and kind of seeing this generative AI boom happen brings a very unique perspective and network that I have, which no other emerging manager really has. So for me, that I think that's one of the key things that makes us very differentiated. I think the second thing that's really interesting is kind of the ecosystem that we bring to the table. So as I mentioned earlier, our anchor LP is a large Italian family office. It's actually the family that's associated with Luxottica. Luxottica is the world's largest eyewear business. It's a publicly traded business, about $100 billion market cap, based in Europe. And with that support and that ecosystem, we can actually tap into a lot of really interesting value add opportunities for our portfolio companies. Everything from shared learnings across digital transformation to sustainability to robotics and automation. These are things that, the corporate business is thinking about every day and has a lot of strategic initiatives working on. They're working with Mark Zuckerberg on making the Meta Ray-Ban glasses. And so I think there's a ton of value add that we can provide for our portfolio companies by tapping into that ecosystem. And so I think that's the second thing that makes us very unique from any other fund out there. And then the third thing is really kind of my desire and ability to build the community, right? I think in a lot of different cases, for many big funds, they don't really place as much of an emphasis on every single individual relationship they have with an LP. But as a smaller, fund manager, I really care about every single relationship that I bring to the table, because every LP matters to me. I'm not some huge multi-billion-dollar platform with hundreds or thousands of LPs. Like, it's really I've got a handful, and they might not be the largest checks, but everyone really matters, and I'd like for them to be strategic and really part of the family as well. And so I think that's a very unique aspect of what we're building at Mangusta that I think not a lot of other funds have the ability to do that.
Absolutely. Yeah, that's solid. And thanks for sharing that. And now, moving to my last question before we move to the rapid fire round. And this is about something we were talking about before the recording started, which is you were setting up your own podcasting studio. So, what are your plans on that front? And what kind of conversations are you looking to have there?
Yeah, yeah, I'm very excited to hopefully launch that soon, and appreciate you inviting me and getting me excited about this space because I do think it's a really interesting space to be a part of. For me, one of the biggest questions is how do I really build this brand and build a following and recognition for what we're doing. And as we talked about, I think podcasting is certainly one of those methods that has taken off a lot in the last few years, and I think is a really great way to get your content and your thoughts out there. And so that's really the main focus is actually just building the brand, building the recognition of what we're doing, sharing some of the knowledge that we've been able to gain from kind of investing over the last decade, bringing some of the portfolio companies that we've invested in and the founders to talk about their journey. One of the preliminary kind of ideas that we have in terms of how we're going to structure the conversations and the content. We'll see if this ends up being the final result, but we want to make it about legacy. And it's a really interesting word, right? Legacy. There's a lot of elements of it. There's the past, there's the future, there's like impact oriented as well. And I think for us, we want to be, a lot of our LPs are family offices that think a lot about this. How do they set up the next generation? What kind of impact do they want to leave on the world? And so I think that's where this idea originally came from. But when you think about it, everyone has a legacy, right? I have a legacy, you have a legacy, you have things that, you want to impart behind to your listeners, to your family. Same for me, and we all have a story of where we came from, right? And what our parents' legacy is. And so I think that's also super fascinating to me because as I get to know founders, one of the key things is just really understanding who they are as a person, understanding where they come from, what motivates them, what drives them, what do they want to achieve. And I think just really getting to know that person is something I do in every meeting that I have. I'd love to share that more with the world and just have those conversations in a more, on a podcast or a public forum and be able to share that with the world. So I think that's really what we're going to be doing on the podcast, unless hopefully things don't change, but that's at least the initial thought there.
Absolutely. And really like the idea of legacy. I think that's a good term that kind of brings together the personal life of people and also their work life into it, and what they want to leave behind, and what they want to be known for. I really like the idea. And let's see what you go with. But otherwise, I'm a big proponent, as you already know, of VC starting podcasts. It's a great way for VCs to build their brands, and I'm always selling VCs to start your own podcast. And it's always a sell. They feel there are already too many VC podcasts out there, which is totally not the case. There are actually too few VC podcasts, and it's going to be increasing every passing day. And it's an opportunity now, and it's a great way to showcase your network. It's a great value add for your portfolio founders as well, right? You know a lot of amazing people. You talk to them, you bring out the insights, you record it, you share it, right? It's out there for your portfolio founders to learn, even for other founders who might be a future portfolio founders to learn. And you attract those high quality founders. You get into high quality networks, because if you're hosting a high quality founder, you get into that network just by hosting that person on the podcast. It goes out in their network as well, and you're just getting access to those networks in a very interesting way. So I think more and more VCs should do it, and we help VCs do it via my agency at Podcast 10x, which is also the sponsor of this episode and all our episodes. So that's a great idea, and I would love to work with you on that in case you prefer our service. But open to you. But coming to my last section of this episode, the rapid fire round, I'll ask you six quick questions about the investing you're doing, and you have to give six quick answers, right?
Yep.
So the first one goes: what are the sectors and regions you invest in?
All sectors, all regions.
Awesome. What's the typical stage of investment?
Typical will be seed stage, but we'll play everywhere from pre-seed to Series A, and then we'll do follow-ons into stages after that as well.
Awesome. Do you lead rounds?
Yes, we do lead rounds selectively.
Awesome. What's the typical check size you put in?
Varies widely, but anywhere from 500K to 2 million.
Awesome. Where can founders apply for funding in case there's a direct way?
I would say either send me a message on LinkedIn, or you can go to our website. We have our emails there.
Awesome. Last one: where can our listeners follow you?
I would say LinkedIn, Twitter, YouTube. We also have a newsletter as well. Feel free to DM me if you want access to that, and would love to add you to that.
Awesome. I'll make sure to put all those links in the show notes below. Thanks so much for making time for this, Kevin. It's been an amazing conversation with you, and I wish you happy investing.
Awesome. Thank you so much, Prashant. It's been a pleasure.
Likewise. Thank you.